Hello and welcome to this fantastic session we've got lined up for you, entitled Pouring Oil on Troubled Waters. I'm going to introduce my fantastic panelists in a moment, ask them to introduce themselves in fact, and talk a little bit about what their experience has been by way of background during these uncertain times. So I'll first of all turn to Gloria. Gloria, please do introduce yourself.
Hello everyone, I'm Gloria Abura. I'm an E-affiliate member of the Association of Corporate Treasurers Act and a member of the Association of Chartered and Certified Accountants, ACCA. I have over 10 years of experience in cash and liquidity management, credit risk management, pension funds, financial analysis, and strategic planning in oil and gas, banking, and governance. I'm really glad to be here.
Thank you very much, Gloria. And over to Hilary for your introduction.
Thank you very much, Caroline, and thank you for having us. Hilary Oonge, as is my name, certainly. A student with ACT at the moment, Certified Public Accountant, Kenya. If it is what I do, I am a Group Treasury Manager for M-KOPA, overseeing the East African and the UK operations from a Treasury finance perspective. Who I am, besides from what I do, I am a student of life and certainly excited to being part of the journey of making better finance professionals of the future generation.
Thanks very much, Hilary. And we'll stick with you now for our opening discussion, really around what have you found of the new things that you've been doing during these unprecedented times?
If I will go first, Caroline, thank you. And you have rightfully said they are unprecedented times, challenging for that matter in ways that we have never seen before. And must admit that throughout my experience now of over 11 years, I've never seen such a scenario where what we are good at in Treasury of managing financial risk, some of those things we had to throw them off the window and adopt the day as it were. Yeah, so a number of things certainly did change. One of them was priority to ensuring that our health and safety of staff was prioritized above everything else, and we had to react uniquely in every market. And I'm saying every market because the way we reacted in UK was driven by how the UK government was really driving the reaction in the UK office. The way we reacted in our China operations was very specific on how China really did approach the operations in China. Fortunately enough, there were many learnings from us because China had already gotten the deep waters before the rest of the world actually did. So a number of them we were actually getting to learn from our China operations, what the industries in China were doing, what corporates in China were doing, and those colleagues of ours were telling us that this could be some of the templates that we're actually supposed to follow. So that was really a good advantage for us, by the way. The approach for Uganda was slightly different from the approach in Kenya. We had a total lockdown in the Uganda operations, and that essentially did mean that some of our staff who actually depend on commission basis certainly could not really earn a living. And we had to find means and ways of supporting those families and supporting those individuals. Which also was different from Kenya, which had what we say is a 50-50 sort of semi-lockdown, so to put it. And out of that, again, there was pressure from some of our staff that could not be able to, do the things that they were able to earn a living. But the advantage for it was the fact that we then moved from a leadership perspective. Our executive team was able to pull in resources that were unique to build up a fund that was essentially going to support those impacted individuals. The Nigeria market was also unique in its own way because there was a full lockdown in Lagos, but partial lockdown in the rest of the other states because it was customized state by state. And the way that the approach for those particular, environments were unique, so to speak. One of the things that really for us is the very fact that even with those very unique country approaches for each of the countries, we did not actually get to a point where we were on a complete shutdown from an operations perspective. which was something that really was unique for our organizations based on the response we got from the board, based on the responses we were getting from our competitors. The very fact that all our staff that were able to be on full-time work were actually empowered to work from home. Yeah, be given their full laptops, being connected to full internet paid by the company, and more importantly, some of the operations that were really, really very difficult to operate remotely, like the call center. The call center was actually then fully empowered to work from home. What that has actually meant is a fact that where we are right now, we are seeing some of those scenarios of work from home likely going to be permanent for us going forward, because we have actually realized that we can comfortably run the operations of the business across all the markets we operate in without necessarily getting people to work from the center or headquarter operations.
So that's great to hear, Hilary, particularly that your organization has been so focused on people's welfare, which is fantastic. And it also just demonstrates that complexity that we're facing at the moment, when there are so many different countries and regions, even as you highlighted, say in Nigeria, where things are being done differently, which I think makes it even more difficult for the Treasury to predict things, because everything is being done on a different basis. You just can't predict. But I'll move with that over to Gloria to get some of her perspectives.
Before we registered the first case in Uganda, it was imminent that there was a threat. So as a business, the immediate reaction was to invoke a business continuity plan, which included protecting employees and enabling teams to work remotely. So we had in office some hand sanitizing facilities, hand washing facilities, mandatory requirements to wear masks, the social distancing. So we had to have the teams working, and some of the teams having to now work with their families, and some not having to travel to work every day, and also having to work longer hours to meet the new business requirements. And across the different markets that we operate in, there are different regulations from the government, most of them putting lockdowns in the countries, which impacted demand for some of our services and products, like fuel. The private motorists were not able to travel to work, like in Uganda, where we had a total lockdown. Other countries had, like Kenya had a partial lockdown, but then that also affected the demand for fuel. We had aviation all over the world not traveling, and airports locked down and closed. So the aviation industry was also impacted. The company had to quickly adapt and focus on areas that were still operating. Some sectors were still operating, and government was one of the key people who were operating, because they had to come in and try to curb the spread of of COVID. So this was one area that we had to focus ourselves on, and that has really helped us. That helped us through the period when it was really uncertain. We are beginning to see many of the countries lifting off the lockdown, and business beginning to pick up. Yes, and we are hopeful.
It's always good to be hopeful, isn't it? Do you think, Gloria, that there are changes, new ways of working that will be permanent? Will there be things that are being carried forward into the future from this crisis, positive and negative, I guess?
Yes. For some of the new things, there's a lot of focus on securing information against the heightened risk of cybercrime, so which could potentially lead to fraud. That's something that treasurers should look out for. So there's a lot of security information focus, and trying to ensure that everyone who is working remotely is able to ascertain that the phishing alerts, and everyone is keen and looking out for any potential threats that could be in that area. Another change or new way of working that has happened for us is most of our businesses have transitioned from paper-based channels to digital channels. So we've moved away from receiving invoices for payment, the paper invoices for payments, and this has been now put through digital channels, and we are able to receive them electronically and process them for payments. We've moved away from receiving payments by cash and checks and moved to digital channels like mobile money and EFTs. And this has enhanced professional efficiency and reduced the cash cycle significantly for us. We've also moved into a space where we're having detailed cash flow forecasting, assuming different scenarios, applying stress tests with varying severities, and anticipating associated liquidity different scenarios. So we are analyzing deeply, how deep will this disruption be? How long will it take? What will the recovery look like? Will it be an L-shaped, a U-shaped, a C-shaped? So this has also enabled us to adjust the cash flow to reflect the very dynamic environment we are operating in right now.
They're fascinating, and yeah, such a lot of changes in the technology space, as you say. It's really accelerated and for the good, one would say. And we've seen that around the world in Treasury, really that push for technology driving it forwards, not only in working from home situations, say, the more obvious, but technology in general. So it's really quite fascinating what's going on. I'll move over to Hilary now for his reflections on what new things might be permanent for the future.
Yeah, thank you, Caroline. I mean, reflecting really, just taking a step back and reflecting deeply what has happened over the 6 months. Sometimes I find it honest to admit that in April, some of them, the scenarios and the models we are done in April, 3-4 months down the line, all those models have proved to have been useless, especially for the Kenyan context. And the reason why I say that is it's not as doomsday as it were. Because you essentially look at it from an economy perspective, you look at it from our individual customer behaviors. It's not as bad as we actually anticipated it to be. In the contrary, it has actually proved a benefit for us in many ways. Sometimes we actually possibly say that it could have been a case of preparedness, because typically all the operations we run are on cloud-based. Our ERPs are cloud-based ERP. We are purely on SharePoint, and we can be able to see what everyone else is doing purely by using Teams. So in one way or another, we were actually prepared from a technology perspective to a level where it certainly does look like that the only thing we are going to miss is the social effect of the office and being able to see Caroline walk across her desk and being able to walk to her and getting her support. Interestingly, I had asked that question, Carol, one of my team members, that what do we think we actually should continue doing? And she was very upfront with me in the sense that, please, if for everything else, just ensure that we continue working from home. So I think in my view, typically speaking, it has worked for me. There are dynamics of adjustments that we have had to do. But I think one of the things that certainly is going to be a permanent feature in our future of working is certainly the working from home. The preparedness aspect of it and ensuring that we have all those tools that we require to have. The cost aspect of it has certainly increased. So I think we'll certainly need those tools, but we'll have to continuously apply ourselves on how we manage that cost going forward. The other one thing that certainly has happened in the last thing, which is my third very important thing, is the fact that we have always been managing through P&L strongly, as most businesses will do. We always are looking at profitability above everything else. But of course, we have seen what has happened where people had to pause and stop managing through the profit and loss and start managing through cash flow and liquidity. And that did see confidence in many organizations, that did see a lot of organizations weather through, but at the same time, that did actually see many organizations go under and never get to survive through this period, unfortunately. So the way I see it now going forward, which is going to be a permanent feature for us, especially now that we are not sure if the curve is flattening or we are going into the second phase, is where we are now going to see a strong force, not only in managing working capital, but strongly in continuously seeing how much liquidity we have. At the same time, how do we be able to look at the profitability, and that profitability growing as it does manage the liquidity lines significantly. So I don't see the that view changing in the short term for us. In the contrary, that's really going to be part and parcel of how we are going to live from a treasury perspective.
Absolutely. That's great. Some of those points you make there are really things that people really need to be thinking about, where they may not have in the past. Often in the past, people, when there's been a failure of a business, they've said, oh, they went under, they didn't have enough cash, but people haven't really taken it seriously. And I think now it's allowed people at every level of business and in the wider communities to understand you can make losses, but that's not a problem as long as you've got cash. Yep. But if you don't have cash, cash is king, or in this country, I like to say cash is queen. It's really, really important. And as I think particularly smaller businesses, single owner businesses and so on, really understanding that is so important. Otherwise, liquidity crisis for that business. But I wonder if you find, Hilary, just sticking with you for a moment, because liquidity is the heart of everything, and because that is the Treasurer's business, and that's what we do. Have you found that you've been closer to board members, to your CFO, to the chief executive? Have they taken more interest before, and is that a good thing or a bad thing?
Oh yes, Carol. Oh, absolutely. I will actually tell you this for sure, that my job could never have been easier as it has been during this pandemic, because the CEO wanted to be the treasurer, the CFO wanted to be the treasurer. Everybody wanted to have clear visibility of what is essentially happening in Treasury. What used to be my daily affairs certainly became the daily affairs of the executive team. So to me, that hands-on approach and support from the executive perspective has never been pronounced as it were in the last couple of months. But partly, I will understand where they're coming from, because nobody really knew what was going to happen. And to a larger extent, the survival of Treasury really did mean the survival of the business. And we had to do a number of scenarios through the executive team up to the board level, where we had to model a number of scenarios that we were seeing, and all those scenarios be tested and discussed through the board level in a way that the board then could actually be able to appreciate that we had done our due diligence and our proper forecasting than we have actually ever done before. I will actually add to a larger extent that, you see, we had a comfortable level where we have always done weekly cash forecasts that were very detailed, and communicated up to exec level. But what the board wanted this time round, which was also a direct need from our investors, was to be able to project what the 5 years plan actually looks like at the tail end of this pandemic. So it was completely uncertain, but the really board wanted is, can you give us a certainty outside the uncertain environment? So that was a very intense perspective, but that also did convince our investors and our lenders that we were on a solid planning perspective. And that's why I convincingly say that I really do appreciate the leadership that came out of the executive and the board management level, because it really completely evened out the conversations that we had with lenders and investors from activating the funding lines that we actually required to survive through the period.
Oh, thanks very much, Hilary. And have you found that, Gloria, as well, in general, that people have got closer to treasurers through this period? Do you think that's a trend that you're seeing across Uganda?
Yes, certainly I feel we've been closer to the leaders. We've had a number of regular calls, detailed analysis of financial data, so that we can get visibility of the impact of the crisis on the business. And this has given, has enhanced agility and given real-time reporting and faster decision-making. This has been happening where we have to share detailed forecasts. However, the dynamics of the environment we're operating right now keep changing with the different government regulations that keep changing by the day. So that impacts the business differently each and every single time, and we have to keep remodeling and adjusting the cash flow forecast so that we can have and update this with giving visibility to the longer term as well as the short term.
Thank you very much, Gloria. And Gloria, cash flow forecasting and so on, that's part of our financial risk management, but there are other aspects. I wondered if you could elaborate a little bit on risk management in general, and whether you think, again, that greater focus on risk management, I think we're noticing, is going to be a permanent feature in the future.
Yes, from a risk management perspective, there's been a lot of focus on credit collections to ensure all outstanding funds are collected on the due date, and carefully selecting which customers to extend credit to in these uncertain times, in a bid to minimize bad debt provisions that we could encounter, especially if now we decide to sell on credit to customers, say in the tourism sector. So there's been careful selection to ensure that we have, we can ensure that our cash flows come through at the end of the whole season. But then we've also had to cut back on some CapEx investments so that we can align the CapEx or the cash flows to meet the shorter term requirements that we have currently, and securing liquidity and contingency funding, drawing down on some credit lines to meet the immediate working capital requirements. Yeah.
Absolutely, and we see a lot of people are drawing down, as you say, and the relationships with customers, suppliers, both ways. It's really important, isn't it? Because there's that, on the one side of it, there's trying to protect yourself and not have bad debts. On the other side of it, it's trying to ensure that those suppliers, for example, survive and that they don't go under because you know, they fall over and then you don't have a supply. So it's just a very complex set of circumstances, isn't it?
Yes, so we've been having frequent reviewing and resetting of credit profiles of the critical buyers and suppliers, as well as analysis of the financial health of our key suppliers and our customers to ensure we maintain a healthy cash flow and be able to stay in business. Yeah.
Absolutely, very, very important.
Carol, let me add something. Yeah, Carol, let me jump in on that quite a bit, which I think is an interesting perspective that Gloria has actually brought as well. Personally, I do admire the approach our leadership took in the scenario very upfront. Much as we really wanted to do self-preservation and do everything we could actually be able to do to give us confidence to survive, yeah? The message was very clear from the leadership that first, our responsibility is to our customers. Now, to a larger extent, we are in a credit business, and our customers have to continue, you know, paying for the devices that we have essentially given as part of our business model. So you would have expected that our customers could have actually found it difficult to choose between paying for their lighting and access inflation versus really having something to keep into their pockets. So our responsibility our executive team was very clear that we have responsibility to our customers. And what we then decided to do is, regardless of the payment status of the customers, we actually decided that, okay, let's be able to support. If they require to take a credit from us to access lighting and information, then we were actually going to be able to do it, regardless of if those customers are actually going to pay us back. The second level was to actually look at the supplier base that we had. We are an SME to a larger extent on top tier. Most of the partners we work with, Caro, are actually SMEs, and those were the people that were worst hit during this period. So it was a deliberate decision that, yes, let's self-preserve, but let's self-preserve with our entire ecosystem so that we are able to actually also guarantee our existence of the suppliers. Now, guess what, Caroline, what happened? The very fact that we put the interest of other people first, and then our interest second, what actually happened is we have performed much better during this period than we actually did before the season in itself. I really credit the approach from that perspective, because if we actually did not do that, then maybe we could have read from a different script. But we got confidence from our suppliers got confidence from our customers, and we are much better positioned now than we could actually have been if we actually could have decided to fully self-preserve ourselves.
It's fascinating, isn't it? And I think it's a trend that we're seeing globally. If we look at, say, listed companies, and there's this debate you may have seen in various of the global publications around, and I think it started in the US really, do shareholders take priority? And it's a big discussion in a lot of boards, because actually I think we're saying now, no, stakeholders take priority, of which shareholders are only one. So people are looking not only to get their bottom line profit, but they're wanting to make sure that their staff are happy. They're wanting to make sure their customers are happy. They're wanting to make sure society in general is happy with what they're doing. And we see that also with the help, I suppose, of social media and technology. And because we are such a globalized world now, that the pressure put on organizations to actually, to act in the right way, shall we say, as you clearly have done, is immense. So that's a really interesting development. Perhaps we can stay with you a little longer, Hilary, and just ask you anything around different financing tools or those kinds of things in terms of risk management that you guys have been using or that you've heard of elsewhere in Kenya?
Yeah, thanks, Carol, for that aspect. There were always two aspects from a treasury perspective pre-COVID: optimizing cash and ensuring that wherever we are deploying the capital that we essentially had was actually well optimized. During the post-COVID, what essentially ended up happening is have enough runway of cash as you can. So instead of us being able to optimize the cash and just keep our liquidity lines where we required them, what we did is, like any other organization, was the fear of the unknown, to pull in as much as we could actually be able to do. Yeah, and I've noticed from most of the treasurers, this was a common script for all of us. Yes, so what then has emerged over time is the very fact that this scenario was not playing out as we anticipated. And what most of our bankers then essentially have done is trying to actually, look at some of the covenants around how to unwind some of those positions that we had built. I think that's one of the things we are proactively working through, so that we lessen the burden from a cash optimization perspective, and our banks are actually very supportive of that. The other thing that has actually come through, which makes most of the, some of the lines that I've seen, is the open currency ratios, especially the countries that are exposed to FX. And you look at it from Africa perspective. So that covenant has been on very high scrutiny for organizations that borrowed on local currency. So one of the things that I've actually seen many organizations do, including ours, is to review the covenants in a way that responds to the COVID scenario much more proactive than reality, as it were. In terms of what then we are actually going to see as a risk mitigation forward. Number one, it has to remain a priority for health and safety from a general perspective. But from a financial risk aspect of it, Caroline, what we are now aggressively starting to do is to ensure that our balance of local currency to USD is carefully scrutinized and properly anticipated from an hedging perspective. And of course, put in balance of insurance on the COVID aspect. It's actually then, can be able to go from an insurance cover perspective, as opposed to just letting it from an hedging perspective.
And Gloria, just to turn to you, in terms of, you referenced earlier, facilities and so on. Anything you'd like to add around financing and risk management there?
In relation to financing and risk management, we've tried to secure liquidity, have contingency funding. There's a focus on FX purchases that we make, as well as balance the FX and the local currency that we are taking onto our books, like Hilary had mentioned, a number of hedging strategies, so that we are able to ensure we mitigate all the risks in relation to the FX. When, something interesting though has been that in Uganda, the currency has been quite stable within this period, and we've not seen a lot of volatility. Much of what we expected, that the dollar to be at has not happened, and we've seen the shilling gain a lot of strength in this period. This was mostly driven by import, not import, a number of people in the country not importing, as well as a number of offshore investors coming into the market to invest within the local economy, especially since we are seeing negative interest rates in various economies offshore. So many of those investors are coming into the sub-Saharan African markets to come and invest in countries like Uganda, and we've seen this have the shilling appreciate against the dollar. It's been quite stable during this period.
Interesting, and it's been interesting. I think different approaches countries have had different impacts overall, haven't they? And as I understand it from my other Ugandan friends, even the impact of COVID has been very slight compared with some other countries, which is obviously really great for you guys. I'm going to keep with you, Gloria, for a few moments now, and just ask you about what have been the biggest challenges, the biggest surprises, good or bad, positive or negative, and the learnings for you personally through this whole period?
I'll start with my biggest surprise. We've recently gone through a budgeting cycle, and it was an interesting budgeting cycle, very forward-looking. It was a trigger-based budgeting cycle with a number of assumptions that will be put into action when the triggers happen. So this has it's been different compared to the previous years, where we had a lot of historical data playing a key role in the budgeting cycle. But that historical data may not apply anymore because we are living in a new normal. So we are looking at very forward-looking information and having very forward-looking assumptions so that we can have our budgeting cycle. I've also noted that beyond dealing with the immediate liquidity requirements, the working capital requirements, the FX volatility that we are predicting, we are left to predict and see what will happen within the next 6 to 12 months. We are looking out and learning each and every single day, and there's quite a lot to learn through this pandemic. And the real-time reporting, decision-making, us focusing on a number of key things like transitioning to digital platforms. This is something to look out for and key learnings for me.
And Gloria, just one other thought. I'd like to ask you, if you were to give advice to other treasurers, having learned so much through this period, what would be the piece of advice you would give to others?
I think the piece of advice I would give is this season is going to pass. How it will end is what we are uncertain about. However, we should all keep working at ensuring we have agile systems, make key decisions fast, so that we are able to have everything running in a very quick and agile way. And I also encourage them to upskill through ACT and get to learn quite a lot that ACT is giving through the different business insights and different articles that they're sharing with us. We are living in uncertain times, but with looking into your numbers, having to review on a very daily basis, having to always look out and see what needs to be done and take decisions in a very quick way will always lead to the uncertain being certain at one point in time.
Some great advice there, Gloria, and thanks for the plug for the ACT publications and qualifications and so on. And we do find as well, research shows that learning builds resilience. So if it is even just reading an article, if it's doing something different, but also if it's doing some qualifications, you not only build your resilience through this period, but you also have a better platform for your career in the future. So thanks very much for those points, Gloria. I'm going to turn back to Hilary now, and I'm going to ask Hilary, first of all, what were the biggest challenges, surprises, positive and negative, and learnings that you've made personally over this time? The same question as I asked to Gloria.
I think one of the things that may not directly be applicable to myself, but this is one of the learnings that I've picked through the colleagues across the profession, is the very fact that preparedness, as we have clearly said, is absolutely important. And I think very many organizations, Carol, were caught flat-footed, where to a larger extent, the environment and the scenario required Treasury professionals to lead the conversation. But many organizations, especially in our part of the world, not many organizations do appreciate the value and input of corporate treasurers. And most of the jobs that the corporate treasurers do are actually handled by either the CFO levels, who may not have proper time to actually invest in doing the work as it's required, or by accountants who are actually not trained to do the treasury responsibilities as it ought to be. So I think for me, it was really a wake-up call to our part of the world that do we had more trained corporate treasurers very well equipped for this particular environment, then many of our organizations could have been better prepared and actually be able to fulfill their mandate more confidently, even if it were during a risky period. I mean, you've heard from Gloria and what they were able to do. I believe much of that was really an input from a very fact that the company she works for has a lot of input and value for that particular profession. I think that's one for me, and it could be negative and positive depending on the foot, the shoe, the foot in which you're wearing the shoe. The positive aspect that came out for me was a question of then we have now been able to test our business continuity matrices, Carol. To a larger extent, we have always said that we are managing risk, but our risk management schemes have actually never been put to test and to the level in which they have been put this time round. So for me, I'll actually take it as a positive that came under as sort of a silver lining that came with a dark cloud. The very fact that now we can be able to see the organization from a 360 and be able to address some of the things that we thought will never happen, but have actually been able to happen now. Yeah, you know, at one point we were taking a good example and actually saying that when we say do not spend, it actually means do not spend. It does not mean that do not spend because that is going to bring in revenue. Sometimes you have to forgo revenue because you have to survive. Yeah, so to me that was very central. The other critical thing that has actually, you know, for me has been a critical learning, Carol, was the fact that a thriving organization during a risk period does require culture and leadership. Many of our organizations that have, you know, eased out of this environment seamlessly are those that have always had a culture of practicing what they say and living what they say, and at the same time, you know, having leaders leading from the front and not leading from the back. Yeah. So to me, that was very fundamental, and I can take examples that I've actually directly witnessed that the leaders took a stride ahead, and that actually was the reason why they survived this particular period. And then the final thing, Carol, that has been a strong positive learning for me is the very fact that with proper leadership ahead of the pack, then you're able to have you know, people playing at the level, people playing at the, you know, areas in which they are good at. You know, like I think I've said the very fact that if you know Hillary is good in treasury, then you're not going to take Hillary in supply chain. And to me, this is very practical because at the time when we were starting this crisis, Carol, and I think I've told you this before, I was running both supply chain function and treasury function. Yeah. 2 months deep into the scenario, we actually realized quickly that, wait a minute, we are actually making a mistake. There is an expert in supply chain within the organization that can be pulled back from the role he was handling to be able to sit in that responsibility so that Hillary can actually be able to do what he's supposed to be doing, which is to manage treasury at a time when treasury was actually a risk dynamic. So for me, the critical learning out of that, Carol, was put the right people to do the right things. Doesn't matter the risk you have to take, because that in itself can actually spell your survival out of the environment or the doom out of the environment.
Indeed, and I think that's some couple of great points there to pull out a little bit. There's always that phrase, or people say, you don't get a teacher or it's like getting a teacher to do brain surgery. We have different skills. You wouldn't go to the dentist to have your teeth pulled out by somebody who was an electrician, perhaps.
Absolutely.
And I think it's really, really important. And also you mentioned culture. The other day when we had the ACT Virtual Treasury event, pre to the main GTR event, I think we talked about that expression, culture eats strategy for breakfast, meaning that sometimes strategies like budgets can be out of date by the time they're written, and you have to take a new direction. Whereas culture, if you have a culture of agility, if you have a culture that knows how to deal with change, then you're much better set up. So thanks for referencing that. Again, and pulling that out, Hilary. So we've just got a couple of minutes left. So I'd just like to ask you both if you have any final words for our audience today. So just sticking with Hilary, any final words about, oh, actually, Hilary, I forgot to mention, what's your advice, your one piece of advice to treasurers? That's what I'd like to hear from you first before we round up.
I have many pieces of advice, but the one critical advice, Carol, I'll actually say is, we have survived out of this scenario because of the trust and proactiveness with our partners, be it our customers, be it our suppliers, be it our bankers, be it our lenders, be it our investors. Trust and proactiveness has been the recipe that has actually driven us to a confidence level in which we are as a corporate. And I'll keep saying that to everyone, that if you actually are able to have a recipe that has both trust and proactiveness, those two aspects will actually be able to take you, through the most difficult times, like we have seen in the couple of months ago, Carol.
Absolutely, both very, very important aspects, Hilary. So thank you for raising those ones. Also, it ties in with some of what Gloria was saying a moment or two ago. This isn't going to go away quickly, and we need to be aware of that and think that through. So any final comment for our audience, Hilary, now?
Very true. That was actually going to be my final comment as well, Carol, and grateful that Gloria brought it up. The truth is, we could think that the curves are flattening, but we are also seeing other countries starting to pick pace again. For instance, the UK, in which you are, Carol. And it's likely to actually say that we are not out of the woods yet. Yeah. Politics, especially for our part of the world, has already started picking up pace. We are seeing Tanzania already going into an electioneering period. We are seeing Kenya already 2 years into an electioneering period, but already in the mood. Uganda is getting into an electioneering period as we speak. And those kind of environments, are usually doom environment for treasurers. Yeah, from business perspective. So they are actually picking up at the tail end of these difficult points. So I could actually say, for our part of the world, we are actually going into even a more difficult environment. And I think all I can be able to say is we have weathered through, a challenge that none of us knew about. And I think that spirit that has seen us weather through that challenge is certainly the spirit that we require to survive even other more deeper challenges that are lying ahead of us. And so for me, it's just to keep saying that the spirit of a treasurer is a spirit of, seeing light at the end of the tunnel. We speak risk, but we see hope. So really hope that at the end of the day, we can actually be able to guarantee our businesses, solutions around managing our risk, but at the same time, we should actually be able to inspire hope within the organization that we work in. That regardless of how difficult it is, we actually will be able to weather through whatever scenarios that are lying and are waiting ahead of us, Carol.
And then that's really about real leadership, isn't it?
Absolutely.
And of course, Gloria, you mentioned hope earlier. Do you have any final words that you'd like to say?
On my side, I'd like to say technology has been a key boost in this period when people had to work at home. We had to have connectivity up and running. So technology has been a key facilitator for this. And this period has had quite a lot of learning. The period is here. We just have to be hopeful it will come to pass. And soon the curve will flatten and there'll be a recovery, because everything that goes down, there will be a time when the economy has to pick up again. The timing is what we all have to question, but we know there'll be a recovery soon.
As a Scarlett O'Hara, I don't know if you know the movie Gone with the Wind. It's a very, very old movie. But as she said, I think tomorrow will be another day. Or as people say, the sun always rises again, as they say. So thanks for those that final message, or from both of you, a final message of positivity.
Very optimistic, yes.
It's been great to have you here today. I think you have very successfully poured that oil on the troubled waters. You've calmed things down. We know we're going to get through. So thank you both, Gloria and Hilary, for being with us today. And take care, God bless, and see you again soon.